Yes.
Right. But that takes us to another very interesting angle to this conversation among what you put out about, which has been a source of worry to not just Nigerians, but to our development partners with the World Bank, the IMF, about our deficit spending, the level of our direct investments that we need in the economy, the debt that we keep piling up, and whether we're doing very well on the portfolio investment side of things. But the other side looks a little bit light at the moment if you look at the capital importation data for last year.
Well, I think that the issue with the capital importation is that the portfolio investors have come back. The stock market has gone up quite a lot. They're buying both our Naira bonds and also the dollar bonds have been oversubscribed, so that's good. The problem is that the portfolio investors, though, are running out of things to buy. I mean, they drive up the price of the stocks. They don't want to. There aren't enough stocks. Our capital markets are not developed enough. On the direct investment side, I can tell you there are lots of people that want to do things in the country, and they're coming back. We just saw the show on Lagos open for business, but of course, direct investment takes several years to organize. So someone 2017 or 2018 starts to study a market, they want to make $10 million investment, $100 million investment. By the time you have a significant amount of money flowing in, it's 18 to 36 months later. So that's gearing up. As long as we continue the structural reforms, and particularly Lagos stays focused, that will come 2019, 2020. But I'm worried about the portfolio investment, just because if we don't create more things to invest in, why would portfolio investors grow their investments here? They need something to invest in.
So we need to grow. You think we need to deepen the market, the equities side of things?
Well, both markets. I mean, we don't necessarily need to deepen the federal government paper because we have a big deficit. But in terms of the debt market, FMDQ, for example, is the exchange, private actors, companies issuing debt, that needs to deepen. Also, on the stock market, I don't think we've had an IPO on the NSE for 2 years, 3 years. So that needs to come back. In fact, there's been some delistings as companies have taken the minority away. So that creates less investable assets. And so there's so many investors out in the world who are interested in Nigeria, are prepared to take Nigeria risk at this stage because we're doing a lot of things right. But unless there's something to invest in, they're not coming. So it's really important that we develop the capital markets.
The fiscal deficit spending keep bothering people, but the government officials keep saying, look, we are the only administration that spent this much, chest beating 1.6 trillion naira so far, trying to play down the rising level of debt.
Well, I think that the federal government is certainly doing the right thing on the focus on the tax receipts. And of course, PwC has been very consistent the last 2 or 3 years. We need to increase our tax take. Oil is not enough, and our tax take outside of oil was woeful, 2% of GDP. So I think what's happening is that focus, though, takes some time to turn into the flow, and I hope we start to see it. Of course, this month we have the end of the voluntary asset and income declaration scheme from the federal government. They vowed not to extend it. We'll see what the impact on that is, both the one-time impact of people that have paid into it, but also the ongoing impact of better tax compliance. So I think we're optimistic that tax compliance is coming, but it's a bit of a race because we've got a big deficit and we don't yet have the tax revenue coming in. And of course, now we're projecting that the federal deficit is going to be over $3 trillion. So it was $2 trillion when the budget came out, but we said at the time we're probably not going to get the tax revenue that we're projecting, and that seems to be coming true. So we're going to see a deficit of around $3 trillion.
Let's talk about elections. The political horse race, as you call it, for 2019 will be a defining factor on a number of fronts. Give us your playbook here. What do you think will play out in terms of spending, in terms of where interbank rates will look like, how it will impact on market, whether we'll see some outflows from portfolio investors? How deep do you think they will take the market when they decide to fly? Still looks we're a bit of a decent first quarter yet.
Well, I think that, I mean, this is only my third election cycle in Nigeria, but in some ways it's the most uncertain that we've seen, right? And we're sitting here, the election's not very far away, 15, 16, or less, 15 months, 14 months, I think. And of course, what we've seen historically as we run up to the election, a couple of things happen. One is, of course, there's more spending because people, for obvious reasons related to the need to get elected. At the same time, foreign investors become cautious, so they're pulling back. So this big inflow on the portfolio side is probably going to ease. So the net result of that is that there's pressure on the exchange rate. So we've seen in previous election cycles, you've had the official exchange rate change. But certainly, of course, we're in a different regime now, and we have, let's not even call it the parallel rate, but the investor and importer and investor rate. So we could see a lot of pressure on that. I think in our projection, we have it moving from 360 to 385 as we run into the election. So we expect those normal forces to play out here.
In terms of what folks will be looking at, the government officials have said, look, we're going to focus on the economy. We're not going to let our eyes off the ball, despite the cycle of election seem to dent the economy each time we pass through this milestone. Do you think, from what you've seen at the moment, that the government administration will be able to focus on the economy and less on the political horse race?
Well, as we've said in our previous reports, and this report touches on it too, if we can keep the momentum on the reforms, structural reforms is going to be good for us. And I think with the election, it's important to distinguish a little bit between the federal government and the states. So if we take Lagos State, for example, and we just saw that fantastic piece about Lagos State and the efforts of His Excellency Governor Ambode here, Lagos State is very likely to have the same governor win the election, and I think you're going to see the structural reforms are sort of built in already kind of on a long-term view. So I think we'll be able to keep that momentum. And of course, other states, we were chatting earlier about Kogi, for example. It depends a little bit on the governor's situation, whether the governor's going to change, whether the governor's in a strong position. He or she, I think I can say he. I don't believe there are any female governors at the moment. If the governor can stay focused through, if they're going to get reelected and they stay focused, they can continue. But at the federal level, there's so much uncertainty.
Let's discuss that after the break. Andrew, let's keep it there. We'll be back after the break. You're watching Business Morning.